A very warm welcome to Mint. I am Zara Khan, and joining me in the studio is Anup Roy, who is here to talk about the country's central bank, RBI's latest annual report, in which it talks about the country's economy, which is not going to show signs of improvement in the near future. And it also says that cutting down interest rates is not an appropriate solution to prop up the economy. Hi Anup, thanks for joining me on the show. So why is the RBI being so bearish on the economy, and why doesn't it want to cut down interest rates?
Well, this is not the first time that RBI is saying that government should do more. And it's not that RBI doesn't want to cut down the interest rate, but inflation is sticky. And if they want to cut down the interest rate further, if they are cutting down the interest rate further, then inflation will spike up even further up. So RBI runs the risk of stroking inflation, but it's not very sure that cutting down the interest rate will really help in propping up the growth, because the growth is slowing down not because of RBI's monetary policy, tough monetary policy, tight monetary policy, but also because of a lot of policy paralysis from the government side, high fiscal deficit, etc. And RBI is again and again telling this to government that please mend your house in order so that we get some space so that monetary policy also works. First, you please make sure that your fiscal policy is taken care of properly and your expenditures are cut.
It's been a little harsh on the government, so what does it want the government to do, like in the near future, so that it can properly?
Yeah, so it wants various policy paralysis, I mean various measures, low-hanging fruit kind of reforms to get initiated at least, and cut down the fiscal deficit and cut down the current account deficit as much as possible, and also cut down the subsidies, etc. Increase maybe fuel prices a little bit, and increase the subsidy, increase the fertilizer prices a little bit so that they reflect the reality. And of course the fuel prices has to be deregulated, I mean diesel prices has to be deregulated. By doing so, government can bridge its fiscal deficit. It's pretty high. I mean the government is expecting 5.1% of fiscal deficit of GDP this fiscal year, and it could be revised. It is in all likelihood it will be revised upwards. So in this kind of high fiscal deficit situation, obviously government has to get its act right before RBI can get some space to act its monetary policy, so that its monetary policy is effective.
Now the RBI has made its point of view very clear. What are other economists saying, and commercial banks, what are they saying?
Well, commercial banks obviously plays a very large role, because whatever RBI does, even if RBI cuts interest rate, as long as commercial banks are not passing it on to the customer, the rate in the economy doesn't fall really. So we have seen that even if RBI is cutting down the rates, commercial banks are not cutting down the rates as much as RBI wants them to do. So commercial banks have a lot to do about it, and obviously they are regulated by RBI, so they will take RBI's side. But economists are also critical about RBI's policies. Economists are saying that there was actually no need to hike interest rates so much that they have done till October 2011, because it has really slowed down. It has had an impact on the growth scenario in the country, and economists are also saying that even if you cut interest rates now, you cannot really recover back to where you left, and so economists are also getting a little bit harsh on RBI's policies, and in fact RBI's deputy governor Dr. Subir Gokan has acknowledged that 1/3 of the growth slowdown is because of RBI's monetary policy.
Sure. Thank you, Anup, for all your insights. That's all for now. Thank you for watching. And to read Anup's full story and other stories, please log on to livemint.com. Thank you.